A very good afternoon to you all. Thank you for joining in with us for the corporate earnings review by SoftLogic Stockbrokers. So today, let me introduce myself to you all. So I'm Natasha Fernando, Senior Investment Analyst at SoftLogic Stockbrokers. So today we have Rahul Fernando with us, our Investment Analyst, and Shadini Silva, Co-Head of Research. So first of all, we'll be talking about corporate earnings in detail through this presentation. And once this presentation is over, we'll be moving towards the Q&A session where the platform will be open for you all to put in any of the questions you all have. We'll be more than happy to answer. So let's begin with our presentation. Hope you all can see the screen. Okay, so let's talk about the corporate earnings for the second quarter of this year. So we've received results for the latest quarter, which is the June quarter of this year. And the key highlight about this quarter is that this is the second highest earnings that was reported for the June quarter in the history of the CSE. So one thing key about this is that this quarter's June quarter's results have been able to surpass the average pre-COVID earnings, like more than twice. So this is something like very positive for the market because for the June quarter, the market was able to reach around 98 billion in earnings, whereas the pre-COVID average has been very lower than that. And also something particular about the quarterly earnings is that it has been the third consecutive quarter to report a growth of earnings on a year-on-year basis of above 50%. So like starting from the last quarter of last year, up until now, it has been the third consecutive quarter to report a higher earnings level. So this quarter's remarkable growth is in terms of year-on-year because for the June quarter, the 98 billion earnings have surpassed a growth of over 104% year-on-year. And when talking about the market's earnings, we know that the top contributors to the market earnings is mainly, as usual, the banking sector. So we've seen that the banking sector alone has seen a year-on-year growth in earnings of around 84%. So not only the banking sector, when we consider food and beverages as well as diversified financials, all these three sectors together have contributed 86% to the market's earnings. So that is significant. And here you all can see over the past how the quarterly corporate earnings have fluctuated. So it is clearly visible that the second quarter tends to perform the least relative to the other quarters. So usually the second half of a year tends to perform the best. So because of that, though it is over for the June quarter, though it is over 104% year on year, on a quarter-on-quarter basis, this has dipped by 21%, and that is absolutely normal given that this is owing to the seasonality effect. And here you all can see how the annual corporate earnings have been reporting over the past up until now. So for this year, we've seen results coming in for the first two quarters. And if we are to check the TTM-based earnings, like the recent 4 quarters earnings, then we'll have to add the last 2 quarters of last year's earnings to the first 2 quarters of this year's earnings. So you all can see it is coming up to 533 billion in rupees. This is a significant level of earnings, and that too has seen a year-on-year growth of around 42%. So that means 533 billion for 4 quarters means averagely a particular quarter has seen a growth earnings of over 100 billion. So that is something significant for the market. And you all can see the fluctuations, how it has been. Usually, as I was saying, the second half of the year tends to perform the best. So now let's look into how the contribution sector-wise has been in the market. So for this, I'm inviting Rahul to continue with this slide.
Thank you very much, Natasha. Hi, everyone. Good afternoon. So talking about the contributors in terms of the sectors, as Natasha mentioned, the banking sector, food, beverage, and tobacco, and NBFIs, the non-banking financial institutions. They have contributed to nearly 86% of the total market earnings. So when we are talking about these 3 sectors alone, we are talking about nearly 84 billion in total earnings. Out of that, 98.2 billion June quarter earnings. So starting off with the banks, which led the market growth. Banks recorded nearly around 36.8% in total earnings, and this is a significant growth of 84% year over year compared to the June quarter 2023. And moving on from banks, we then have food, beverage, and tobacco sector. This sector has also seen a really good improvement compared to the previous quarter, which is around 47% year over year, and stood around 27.5 billion earnings for the June quarter 2024. I should mention that food, beverage, and tobacco sector at the same time impacted by this lower inflation, as well as the stability in the economic front. And moving towards the third top contributor to the total market earnings, we have diversified financials, where the non-banking sector, so they contributed to nearly 20 billion of total market earnings. Yet this is a marginal improvement compared to the corresponding period, 1% year over year. Moving from here, then we can look at the market titans, like who has been the major contributors to the market earnings during the June quarter in 2024. So here we have the five main sectors which contributed most for that June quarter earnings, and HNB has been the leader for the June quarter itself. They have recorded around 8.6 billion in earnings during the June quarter. Then following HNB, we have Sampath Bank, 8.1 billion, and then Commercial Bank, 7.9 billion. So banking sector has, like Natasha mentioned, they have led the charge in June quarter. So HNB, Sampath, and Commercial stand ahead of everything during this June quarter. And moving on to the food, beverage, and tobacco, CTC, Ceylon Tobacco itself remained at the top fourth position, and they recorded around 7.2 billion in total market earnings during the June quarter. And in the fifth place, we have LOLC with 4.5 billion altogether in their earnings. So it would be HNB, Sampath, Commercial, CTC, and LOLC Holdings, which led the market earnings during this June quarter itself. And moving on from here, when we are talking about the trends, or rather the trajectories that sectors have been performing throughout past few years in the first half of each and every year, we can see clearly that banks, insurance, food staples, and food and staples retailing. So these sectors, they have been in that growth trajectory on into first half of 2018 onwards to first half of 2024. And should mention the diversified financials or the non-banking sector as well. They have we can identify a growth trend in the diversified financial space as well, except for that first half of 2022, where we saw some one-off significant gains through that interest rate fluctuations. And on the other hand, we have energy, food, beverage, and tobacco with some sort of a inconsistency. Anyways, with this macroeconomic stabilization, we hope these sectors to bounce back as well and maintain that sort of a trajectory in terms of their earnings. And moving on from here, we have in terms of when we are talking about the sectors alone, we can definitely start with the banking sector, which led the market growth during the June quarter. So Natasha will take you through the banking sector and other few sectors from here onwards.
Thank you, Rahul. So let's move in towards the sector-wise earnings. So since we were mentioning, banking sector is one of the top is the top contributor to the market's earnings. So when talking about the banking sector, it is very important to talk about the ISB restructuring as well. So we can see that the bondholders have agreed for a 27% haircut on the ISBs, and even they have offered a local option as well, where under PDI bonds, the dollar denominated instruments will get exchanged into dollar denominated securities. And under the terms of dollar denominated securities, a 10% nominal haircut will be on the 70% of the face value of ISB holdings, and the remaining 30% will be exchanged to rupee denominated securities. So, all in all, this is a positive for the banking sector because we know that out of all the banks, they have actually provided an ISP provisioning cover of over 50%. So that showcases that all these banks are well prepared for the ISP restructuring. And apart from ISP restructuring, another thing to highlight that is positive for the banking sector is that we know currently Sri Lanka is at a low interest rate regime, and this bodes well for the private sector credit to grow. So, as of recent, we've seen private sector credit figures coming in for August month this year, and it has actually spiked. It has recorded 135 billion in rupees, and this showcases this is mainly because of the low interest rates. And with that, we would be able to expect that banks' loan books may expand with this effect coming in, and that would ultimately drive the bottom lines of the banks. So now let's talk about some key players out of the banking sector peers. So talking about commercial bank, we know that this is the largest bank in the listed space, and they have the highest loan book and the deposit base. So in terms of financials also, we can see commercial banks earnings have grown on a year-on-year basis, and their net interest margin has also increased in this quarter to mark around 4.4%. And when talking about their loans, the impaired loans stage 3 ratio has actually reduced in the quarter to mark 4.9% compared to the end of year 2023. And even their provisioning coverage ratio has improved to 49.2%. And now let's talk about HNB as well. So for HNB, with the positive prospects, we are expecting the earnings to grow by over 15%. And even when talking about HNB's financial ratios, their net interest margin stays at around 4.7%, and this is a quarter-on-quarter growth. And also, they have ISP provisioning cover of around 52%, and it is the same for commercial as well. So we'll look into Sampath Bank as well. So Sampath Bank particularly has shown preparedness for EDR, having a 52% ISB provisioning cover. As I was mentioning, it is the same for HNB and commercial bank. And when talking about their margins, the net interest margin has seen a slight increase compared to the end year 2023. And same goes as for their impaired loans ratio stage 3. This has reduced down to 5.7%. And their provisioning coverage ratio has improved to around 58.8%. So one thing to highlight about Sampath is that the bank is efficiently managing their cost of funds. So if they continue to do so, it will be a positive factor to grow their bottom line. So talking about NTB as well, key thing about NTB is that the ISP provisioning cover is the top highest against its peers. It is around 60%. And also their financials are also positive because their impaired loan stage 3 ratio has reduced down to 2.1%. And their provisioning coverage ratio has improved to 56% for the latest quarter. So now let's start talking about construction sector. So this is a sector that overall we are bullish on because when we look into an economic indicator, which is the construction PMI, we know starting from January this year, it has seen an expansion because all time the PMI has been above 50 mark. But only in April, we've seen a downward movement because of many holidays in the month of April. However, up until now, it is above 50. That says that construction activities in the country is expanding. And also, we know that the low interest rate regime bodes well for the construction sector counters because these companies are highly relying on funding. So, with low interest rates, they can easily do their funding activities for the projects. So, out of the lot, let's talk about some of the key players. So, starting with AEL Access Engineering. So, for a fact, we know that Access Engineering is generating income through main 4 segments. They do construct buildings and roads and highways. They also have construction related materials, and then they have a rental income where they generate from their property segment. as well as they have an automobile segment. So when talking about the construction, they have WCT and ECT, where they have a high remaining project value. So these are also progressing well. And even when, in terms of flyovers, they recently opened up Kohvela flyover, and other two are also progressing well. And when we talk about the construction related materials segment, they are the market leaders for asphalt as well as for ready made concrete. So when talking about the property segment, this is a key segment for AEL because through that segment alone, the company can survive because they have rented out two logistic parks, one in Kibulapitia and one in Ekala. So these two altogether generate a rental income of around $650,000 per month. So that is a significant amount. And even access towers are actually operating at its full capacity. So when talking about the automobile segment, we know like prior to when the country was actually importing vehicles, this was a segment contributing a lot to AEL. But now since it is banned, the segment was previously making losses. But as of recent, as a positive thing, the segment has been able to break even. How they have done this is through their after sales services and spare part sales. So we expect the company's automobile segment to break even going forward as well. And when the country resumes vehicle importation, this segment will contribute a lot to AEL's earnings that would further allow the AEL's earnings in the forecast years to grow. So, talking about ACL, so now ACL is focused on broadening their footprint, like mainly in other international markets to explore new regions. But on the domestic front also, the company is seeking to increase their market share. And this is through by expanding the distribution of their switches and MCB product ranges. So with that, we have a positive outlook for ACL since the construction sector as a whole is improving. And let's look at another key player, which is CIND. So under CIND, 90% of the group's revenue is coming through water management product. And also they have electrical product segment as well, which has recently seen a year-on-year growth. So going forward, what we expect is that these two segments, all in all, would see a year-on-year growth going forward. So hence, CIND also have a positive future outlook. So that's about the construction sector. So now let's talk about the diversified conglomerates in the market. So here you all can see how the earnings of the conglomerates have been. So talking about John Keells first, let's talk about the tourism arm of John Keells. So currently we saw kind of a sluggish movement in tourist arrivals to the country because of this visa issue. But now it has been resolved. And since we are stepping towards the seasonal time period of the year, we are expecting an uptick in the tourist arrivals to the country. So with that, we expect improved performance in John Keells tourism arm, which is KHL and HPL, which is the City Hotel Cinnamon Grand. And since I was talking about the tourism arm of John Keells, I'll quickly touch on Aitken Spence as well. Because for Aitken Spence, majority of its the top contributor to Aitken Spence revenue is Ahun. So Ahun is the tourism arm of Aitken Spence, and so the same factors would apply on Ahun as well. So Ahun is the Sri Lankan company with the largest Maldivian hotel chain. So since we are expecting improved tourist arrivals to Sri Lanka as well as for Maldives, there will be growth prospects for Ahun, which results in improved earnings for Aitken Spence. So coming back to John Keells, so we talked about the tourism arm, and also we are positive on its transportation earnings as well, because we expect improved profitability from their SAGT and bunkering business via LMS. And also when talking about the property segment of John Keells, we know for a fact that this Viman residential project is a successful one. And so the company is expecting to have more Viman-like projects. And also when talking about the retail segment, John Keells have CCS and KFP. So these also have improved performance growth going forward because of consumer sentiment improvement. So let's talk about this in detail when we talk about those counters going forward. And also John Keels have their financial arm. This includes NTB and UAL. So previously we talked about NTB and UAL. We're talking more in detail going forward under the insurance sector. One key thing to highlight about UAL is that it is a high dividend paying company. So currently it is one of the top dividend paying companies in the market. So if they continue to pay so, it would be a counter to watch out for in terms of dividends. And now comes the most interesting part under John Keels, that is the City of Dreams. So the City of Dreams is actually nearing completion. Already they have rented out the casino space for Melco. So the banqueting operations will start towards the end of this year. And by mid next year, all the other areas will get operationalized. So, something specific about City of Dreams is that I want to mention is that in other countries where they have City of Dreams established, once they establish that concept, they have seen some improved tourism performance in those countries. So, likewise, we expect the same to happen for John Keys as well over the long run. So I'll talk about Haley's as well. As you all can see, it is the top contributor in the June quarter this time. So one thing significant about Haley's is we know that it is a highly geared company. So now since interest rates are at a lower rate, at a low regime, this would allow the financial expenses of Haley's to go down, and that would result in improved earnings for Haley's going forward. And also, we'll be talking in detail about hay carb and dip products which are under Haley's through the presentation going forward. And now let's look at HEMAS as well, which is also one of important diversified conglomerates. So when talking about HEMAS, we know as per economic indicators, the lending rates are coming down. The rupee has appreciated as of now. So this results in cost reductions in terms of importation for them. And also we expect disposable income in Sri Lanka to increase. So with that, we would be able to see some opportunities coming in for healthcare and consumer related activities at HHL. So, adding to that, we are also expecting a probable boost in the pharma manufacturing factory in Homagama. And also, we are expecting a pickup in Atlas for HHL. Also, we are expecting improved home and personal care volumes and for higher occupancies at their two hospitals. So, all these factors would contribute for HEMA's earnings over the forecast years to grow. So we were talking about construction sector companies and conglomerates. So these two constitutes capital goods sector. So all in all, you all can see how the capital goods sector counters have performed for this quarter. So for this quarter, it is a year-on-year growth of over 100%. That is significant. And even in terms of 4 quarterly earnings, also you all can see it has grown significantly on a year-on-year basis. So now I'm handing over to Rahul to continue with the insurance sector.
Thanks, Nataji. So, talking about the insurance sector, whereas once again, we have seen a growth of nearly 27% in the sector alone, and sector marked around 4.7 billion in terms of June quarter earnings. So, Selinco Insurance, along with the Softlogic Life, dominated the sector, and they altogether they accounted for around 66% of the total sector contribution. They contributed to around 66% of the insurance sector. So when coming into Selinco Insurance, they recorded around 1.9 billion in total earnings for the quarter, and this is a 7% increase year over year. And Softlogic Life, they recorded earning growth of more than 100%, with marking the June quarter's earnings around 1.2 billion. So when talking about Selinco Insurance, first of all, they witnessed a GWP, or otherwise gross written premium growth of 11.7% year over year. And as the company's capital adequacy ratio remained around 219%. This is well above the minimum requirement of 120% capital adequacy. And moving on to the Soft Logic Life has seen a considerable growth over the past few years. So the 10-year industry CAGR, the industry growth stayed around 14%, whereas Soft Logic Life has seen a 26% over the 10-year period. The 10-year CAGR of Soft Logic Life has been 26%. Uh, and in terms of the uh, capital adequacy ratio of Soflogic Life remained around 367%, whereas, as I previously mentioned, the minimum requirement was around 120%. Increase Soflogic Life witnessed increase GWPs. The gross written premiums were up by 14% year over year during the June quarter. And should mention that other revenues of the Softlogic Life saw an increase of 45% year over year, reaching 2.9 billion. So this significant other revenue growth was driven by a significant rise in the net realized gains of 1.3 billion. This 1.3 billion is due to a sale of a treasury bond. So this resulted, or this rather underpinned the bottom line growth of the Soft Logic Life. Moving on to the other counters, we have Janashakti Insurance as well. So Janashakti Insurance remain as one of the highest dividend paying companies with a dividend yield of 33.9%. And should mention that Janashakti Insurance, they recorded a GWP growth of 44.6% year over year during the June quarter. And we should not forget that there will be an added interest with the lifting of vehicle importation ban for the insurance sector as well, for the general insurance. As we all know, there has been a ban of vehicle importation during the past couple of years. So it will be lifted gradually with the new government's setup, as well as the previous provisions. So with that, we will be able to see a growth in the insurance industry in the coming up quarters. And there has been introduced where instruments like fixed deposits plus the insurance policies. So these kind of plans are sort of things that can attract consumers, can attract customers to the insurance industry. So introducing of these will further boost the company's earnings growth in the coming up quarters. And moving on to the non-banking financial segment, the non-banking financial segment, these counters saw a notable dip in the June quarter earnings. This is mainly due to because of the falling of the government securities yields. So due to this due to this reduction, or rather the going down of government securities yields, the segment or the sector was some sort of on this low slide. Altogether, diversified financials recorded around 20 billion from total market earnings, and LOFC led the sector with 4.5 billion and 3.8 billion respectively. And as I previously mentioned, the lift of vehicle importation ban, this will also be on advantage to this non-banking financial institutions as well, because the leasing companies will be able to see that growth coming in, the demand coming in for more of vehicle leasings, things like that. And moving on to food and beverages, we can see that food and beverages also contributed significantly to the market earnings during the June quarter. The total sector's earnings went up by 58% year over year, and this was led by CTC, recording around 7.2 billion, and followed by distilleries with 3.7 billion. So CTC saw an earning growth of 16%, and we expect these earnings to improve, and we expect rather the volumes and margins to improve on the back of this reviving macroeconomic conditions. And CTC as well as the distilleries, they have focused more into cost optimizations as well. So with those, we hope that there will be margin growth. And the revenue growth, we expect the revenues to drive primarily from price hikes, and also we expect a marginal expansion in the sales volumes as well, due to these improving macroeconomic conditions, easing up of the inflation, and these will stabilize the consumer purchasing power going forward. And talking about the distilleries, the excessive taxes and price hikes over the past couple of quarters, that really hindered the growth of the company, and volumes kept dropping uh, during past few quarters. So this, as a result of this, consumers started to move towards the illicit products. So we hope this momentum will stop, or rather will slow down. And as the inflation is easing, we will gradually see some demand coming in for these counters as well. And also should mention that distillery is entering the beer business with the acquisition of the Heineken. This will give the company a diversified edge, and company is currently at a dividend yield of 10.4% as well. So they consolidated their earnings this quarter, but the contribution from the Heineken is not much of in the considerable range. It was around 140 million in terms of their net revenue, whereas the other segment recorded around 7.3 billion in the net revenue. And in the food, beverage, and tobacco space, we should mention that the significant improvement that CCS has seen. They have seen more than 100% earning growths, and recorded a nearly 1.2 billion of earnings during the June quarter. So we expect these earnings to grow, driven by a probable growth in the consumer spending with low interest rates, which may boost the top line, and a probable reduction in the cost of sales due to the stable LKR with the low finance costs as well. And the partnership with Reliance Industries of India may further boost CCS profits in the medium term. So we remain positive on this counter as well. And moving on to the Sunshine Holdings, and the earnings from healthcare will thrive amidst this added contribution from manufacturing for Sunshine. So they will see. So the further consumer arm of theirs continue to bolster amidst this gradual recovery in consumer sentiment. And the IFC investment that will increase annual production capacity for Lena Healthcare manufacturing, and this expansion of both the retail and online presence of HealthGuard Pharmacy uh, will further be a positive for the Sunshine Holdings. And next up, we will move to the materials sector. Natasha will take you through these segments.
Yes, so thanks, Rahul. So I'll talk about the materials sector earnings. So you all can see materials sector also have performed well. And out of the top contributors, we can see CIC, lubricants, hair carb, glass, and dip products have been the top contributors to the materials sector. So let's talk about these companies in more detail. So talking about CIC, as per the latest quarter's results, CIC has achieved a notable growth in their profits, and this is underpinned by a revenue growth in their crop solutions, then their livestock solutions, as well as the health and personal care segments. So, as an economic factor, we know that there's a moderation in inflation as of now, and this actually bodes well for their agri sector because that would allow more demand for CIC's fertilizer. And when talking about lube, so we expect that lubricants may maintain its market share in the range of 42 to 46%. And this is why we are saying this is because we expect their volumes to grow by around 8% during this year. The reasons why we expect this growth is because of increasing demand for lubricants backed by sound consumer confidence, and also this is mainly because we expect a rising in the economic activity because of tourism. So once tourism gets more activated, there'll be more mobility within the country. That bodes well for lubricants. So another key thing about lubricants is that they are a high dividend paying company with a dividend yield above 10%. So that is also another key thing to watch out for. And also when talking about other material sector counters like hay carb and dip products, which are under hay list. So these two counters both would be a good hedge to currency risk because a larger portion of their earnings are in terms of dollars. And given that over the medium term the rupee devaluates because in the backdrop of Sri Lanka is potentially now starting to repay their debts. So with that, that would be a positive thing for hay carb and dip. So when talking about hay carb is moving towards value-added products. So compared to the current products that they have, like conventional products, when they move towards value-added products, these would be highly priced products. So that would help hay carb to tap into new markets as well. And this is despite there being a fluctuation in the coconut prices. So when talking about dip products also, we can see that dip has entered into new varieties of like new varieties of products. So that would also allow the company to grow going forward. And on a statistical basis, in terms of exports, we've received results on the external front for the month of August. So the rubber exports are by 29.5% year on year for the month of August. And under rubber exports, the industrial and surgical gloves are up by 44% year on year. And also, when in terms of coconut-based products, the exports are up by 23% year on year in the month of August. And under coconut exports, when we look at activated carbon exports, this is also up by 27.9% year on year. So those two statistics actually showcases that hay carb and dip products have a positive future outlook. So let's look at glass as well. So glass is a leading manufacturer of a variety of food and beverage brands. So that is not only those, but also for Heineken as well. So we are expecting improved consumer sentiment in the country to happen. With that, there will be a direct positive impact on glass because there will be improved demand for glass products as well. So let's move towards our next sector. So that's consumer durables and apparel. So overall, we are bullish on this sector over the medium run because we know as export-driven country, Sri Lanka's exports are mainly dominated by apparel exports. So since start of this year, we've seen the apparel exports again gradually starting to grow up. And also in the month of August, we've seen the apparel exports have been above $500 million. So this happened after 2 years, and that's a positive thing to talk about. And especially talking about some of the key players under this sector, like TJL, we know TJL is mostly towards cotton-based products. So they have been the dominating player for cotton-based products. And now they are actively getting into activewear, intimates, and comfort wear because there's continuous demand coming in for synthetics as well. And the edge where TCL is at because TCL has a broader customer base relatively compared to its peers. So that's another thing we can be positive about TCL. And also, we know there's a turmoil in Bangladesh. So, with that, there can be a kind of a demand portion that can come towards TGL because other apparel companies are actually operating at their fullest capacity. But TGL has a plant in India which can still supply for added demand. So, if there is demand to come out of the Bangladesh turmoil, then obviously TGL would be able to cater for that extra demand. And when talking about MGT, like TGL is more towards cotton, MGT is more towards synthetic based products. So currently, more demand is coming towards synthetics. So with that, MGT has a positive edge. And also we know MGT's main customer is Nike. So majority of MGT's earnings are coming through Nike. But as of now, as of recent, top tier brands have not been much activated. But going forward, what we expect is these top tier brands like Nike to get more activated. And with that, there'll be more demand coming in for MGT, is what we expect. And not only that, overall for the apparel sector count as a whole, over the medium term, when the rupee devaluates, it's a positive for them. And also, when talking about the major export markets of Sri Lanka, we know US and UK are the major apparel export markets. And currently, they've seen an aggressive moderation of their inflation because it peaked back then, but now it has come down majorly, and also their interest rates are at a lower rate as of now. So this allows the consumer sentiment of those countries to improve with more economic activity happening in those countries. So when that happens, we can expect more demand to come towards the apparel export companies in Sri Lanka. So that's another positive thing to watch out for. So now let's move towards the next sector, which is the utilities sector. So you can see there's been improved performance in the renewable sector counters on a year-on-year basis as well as on a quarter-on-quarter basis. So what is positive for this sector is that we know as of recent we've seen many of these foreign agencies releasing funds for the development of the renewable sector of Sri Lanka. Like ADB has released funds for the development of renewables in the country. And also, even the Sri Lankan government is very keen on encouraging these companies. Like Sri Lanka is also expecting that by 2030, 70% of the power generation to come through renewable energy. So these are some of the main positive factors which is why we are expecting these counters to perform better going forward. And if we are to talk in detail about some individual key players in the sector, we can see that HPWR has commenced a 5 megawatt solar power plant in Ampara. And also, they've seen participation in new tenders motivated by improvement in CEB payments as well. And with that, there is a lot more new projects underway that is expected to lead a gradual improvement in their margins. So that's another sector that's another counter which is attractive. And also, when talking about VLL, there are new projects that are coming into the pipeline of VLL. One thing is the 4.9 megawatt solar power plant in Hambantota. And also, they've seen increasing utilization of the plant factory and increasing demand for other like ground mounted and or rooftop solar systems in the company. So with these positive factors attributed to VLL, we can expect that counter to also see a future growth. And when talking about wind is the company, renewable energy sector company with the highest capacity. Also, they have this 10 megawatt Kapitigola plant in Anuradhapura, which is scheduled for completion by the end of this year. Also, they have a larger 100 megawatt Siambalandu plant, and that is expected to complete by the first quarter of 2026. And also, they have successfully finished the commissioning of Hirura's 15 megawatt wind power plant as well. So those are the prospects for wind's future growth. And all in all, talking about the renewable sector companies, another key thing to highlight is that these are top, like good dividend paying companies. And out of the lot, HPFL has the highest dividend yield. So that's another key thing to highlight about the renewable sector counters. So to talk about telecommunication services, I'm again inviting Rahul to take over this sector.
Thanks, Natashi. So, talking about the telcos, so compared to the notable profits in the corresponding period 2023, due to Dialog's quarterly loss, the sector's profits, however, drove down due to this event. So, talking about the Dialog recorded around 1.5 billion in losses compared to 3.1 billion profit they made in the 2023. So the revenue decreased by 12% year over year to stood around 41 billion for Dialog. However, the core revenues they grew marginally by 4% year over year on the back of mobile revenue growth of 8% and fixed home broadband revenue growth of 7%. Yet the revenue was impacted by the scaling down of this international hubbing business due to their low margin effect, and there has been a forex appreciation as well. So the LKR appreciation. So the hubbing revenue, international hubbing revenue, came down by 113.3% year over year in during this first half of 2024. And this sharp decline in profit can be attributable to the declined forex gain, higher depreciation, and one-off provisions that they have made, and a net foreign exchange loss of 763 million during this quarter hindered the company's bottom line performance. And in order to enhance the customer experiences, Dialog incurred a capital expenditure of nearly LKR 5 billion in second quarter 2024. This will be mainly directed towards improving the high-speed broadband infrastructure. And talking about the SLTL, they have been able to recover from that 2.1 billion loss that they have faced during 2023 second June quarter. They have been able to report only a loss of 479 million during this June quarter, and even though it's a quarter on quarter of negative impact, that's how somewhat recovery from the previous year's second quarter. Sri Lanka Telecom PLC and the Lanka Hospitals, as we all know, they in March they formally revealed the plans of government divestiture. So SLT said the Treasury Secretary informed the Board of Directors that the Cabinet of Ministers has granted approval in principle for the divestment of its stake. So this divestment plans will take in place in the upcoming few quarters, and the divestment will be implemented by the state-owned enterprises restructuring unit established under the Finance, Economic Stabilization and National Policy Ministry. And when we are talking about the SLT's stakes, the Treasury Secretary owns 49.5%, whilst Malaysia-owned Global Telecommunication Holding NV holds around 44.98% stake. So moving on to the hospitals and divestments, we also have Lanka Hospitals on the cards for these divestment plans as well. So Lanka Hospitals Corporation, Sri Lanka Insurance Corporation owns 51% of the stake. The other major shareholder is Fortis Healthcare International Limited with 28.6% stake, and Bank of Ceylon subsidiary Property Development PLC owns around 9.5% stake as well of these Lanka hospitals. So when we come to the healthcare equipment and services space, RCD and Lanka hospitals dominated the sector, whereas the Lanka hospitals coming into the play once again with notable growth in year over year of around more than 100%. So Lanka hospitals recorded 533 million in their June quarter earnings, whereas RCD hospitals recorded around 657 million. Altogether, the entire sector recorded around 1.5 billion in total earnings, which is nearly a 51% upside compared to the corresponding period in 2023. When talking about the RCD hospitals, so RCD is RCD is major player in hospital services and diagnostics, with nearly 840 beds across 6 hospitals. So RCD operates one of the largest laboratory chain in Sri Lanka, ensuring wide accessibility for patients and physicians. And RCD has one of the top players in diagnostics, controlling nearly a considerable proportion of the market share as well in the diagnostics market. And moreover, the expected boost in disposable income driving in patient demand, the high-end healthcare services, and the improved contribution from its lab network, which derives stable margins along with the expected positives contribution from medical tourism, may increase the RCD's medium-term earnings. And the new RCD Port City Hospital, expected at Colombo Port City, may further enhance the long-term earnings as well for the counter. Hence, we maintain we stay positive on this counter as well. Well, to moving on towards the latter part of this presentation, we here have the few companies which performed top few December ending counters should mention, which performed really well during this June ended quarter, as we can see in the light blue highlighted bars, whereas some of the top 3-4 companies performed more than their growth has been more than 100% sometimes, and we can see at overall level that most of the companies have been performing really well compared to the first half of 2023. And in terms of the growth, we can see that most of the companies that we have taken into this slide uh, has been performing between 15% to 60% of growth compared to the first half of 2023. So that would be all about the corporate earnings we have to present today to you. So thank you very much for joining in. So since we have few more minutes left, we would like to answer a few questions. So feel free to direct them towards us as well. So once again, thank you very much for joining in and listening.
Well, thanks, Natasha and Rahul. So until we get a few questions on the chat box, so I think we had a very detailed discussion about how the corporate earnings have been during the June ending quarter. So this is the first quarter for March ending companies. So it'll be 1Q FY25 for March ending companies, and it'll be the second quarter of 2024 for December ending companies. So what we've seen is a very phenomenal performance by overall market participants during this quarter. We saw earnings, touching almost 100 billion, 98.2 billion during this quarter, and over 100% growth year-over-year basis. And if you look at the TTM basis performance, rather adding up the latest 4 quarters and getting the total. Well, earnings have bypassed 500 billion for the TTM basis earnings, which is also a very significant growth. And if you just look at this second quarter versus first quarter, I'm comparing 1Q versus rather the 2Q versus 1Q, there is a slight drop. This is basically based on the seasonality impact, where we normally see the March ending quarter performing a bit more better than the June ending quarter. So that's normally the way. And mind you, this quarter does not really constitute of any extraordinary gains such as exchange gains or one-off revaluation gains or so forth. No major component, has been factored in to these earnings for this quarter. So this is actually a pure organic growth which we are seeing from all the listed entities. All in all, most of the sectors have bounced back very strongly, and some had been continuing the growth momentum. And banking sector in particular had been seeing this robust growth momentum over the recent quarters. We saw over the if you just look at our chart for the corporate earnings during the first few like the COVID year and the post just from 2020 onwards, banking sector performance had they witnessed a setback. But now, all in all, we are seeing that recovery, a strong bounce back, and the ISB, the local option is also quite favorable for the sector. So we've seen a positive response. Even the market had reacted quite well after we saw that agreement being disclosed to the public just before elections, presidential elections. We saw that positive impact coming into the banking sector counters, and we are expecting that momentum to go forward in the forecast years with all the economic indicators and all the basis has been set for
the sector to see a growth. So, and there were other few sectors and counters which we actually touched based on their performance. So we have a few questions on the chat box. So we have a question on elections, how the market would react to the upcoming parliamentary election. So we know 14th of November is the date which is being scheduled for the elections. So, I mean, if you look at presidentials, I mean, we saw quite a bit of volatility just as, they announced the dates for the presidential elections, where the market till elections uh, almost dropped by about 650 plus points. But once we concluded the elections and once the president was elected. Now we are seeing a robust growth in the market, and even today we surpassed 12,000. The SPI index surpassed that psychological mark of 12,000, so which is a very significant milestone for SPI. So what we see as of now is there could be some sort of a volatility in market movement towards once we get closer to elections, but we saw the market, taking a bit of a turn. I mean, with different parties, with different candidates being, presenting their different candidates coming up this time, and there were different options where people opted for looking at previous regimes and how things happened in previous regimes. So what we can think is with an NPP government, with the current president getting majority of the votes, and if that particular party gets a majority from the upcoming elections as well, definitely there'll be a clear direction for the country rather than having multiple opinions, hindering growth. So it all depends based on the verdict. But the most obvious thing which we can disclose as of now is there could be some sort of a volatility once we get closer to the election dates. But we see as of now, I mean, after a week or so, we are seeing clear movement in the market. We are seeing some developments in the country, and we are going to have the IMF discussions tomorrow. Tomorrow till 4th is the scheduled dates that they have fixed for IMF discussions, which is a very, the next review discussion, which is a very positive movement that's happening in the country. So what we can say is if we move towards one direction, one proper direction, definitely the market will benefit from that. And soon or less, I mean, when we get that debt restructuring also being approved by IMF, when we get the nod from official creditors, once we see that rating revision getting on the country sovereign rating getting revised upwards towards early next year, definitely market is going to see that positivity coming in towards with foreigners looking back again at Sri Lanka. I mean, even current levels, our market looks quite attractive. So it's just that that rating revision is a very key thing, a key milestone which Sri Lanka has to go across with. So definitely what we can see is despite some volatility, there are a lot of positive events that can take place consequently. So definitely what we can expect is good time to invest. Still there are undervalued stocks. If you look at a YTD basis, a YOY basis, still there are undervalued stocks, which has a very good potential to move forward with more foreign interest, expected to be on them going forward. So definitely positivity is ahead is what we can expect, but all depends on the final decision that we are going to get after 14th of November. So basically, we have a question on based on the IMF decision, the fourth tranche. So we are going to get another tranche from IMF disbursement of $2.9 billion. So so definitely, the country as a whole is going to benefit with the IMF disbursement. So it's not just a particular sector that we can, target this to. It's how we have to look at this is definitely the entire country. The system is going to benefit because this is going to be utilized based on the needs, the priority needs of the country. It could be budgetary support. It could be to to allocate for some essential inputs. But all in all, we've been managing our reserves quite well. We've been managing our government expenditure and revenue quite well. Fiscal position has been very much stable up to the first half of 2024. It's actually above expectations also. So the targets set by IMF in terms of revenue to GDP, expenditure, fiscal deficit to GDP, all, I mean, in terms of revenue, we have seen a robust growth for the first half, I mean, even for the first 7 months of 2024, which is very exceptional. So if the current government or the current president and the government which we are going to see after 14th is going to maintain these targets, if they're going to go by these targets and achieve this, definitely it's going to be a benefit for the entire country, and we will see more multilaterals giving us funding. It could be low cost debt, it could be funding for different projects which they are keen on. And also we will once the rating revision happens, upward revision happens, we might be able to access the international markets where we could be very well able to get funding at a very, very low cost. So those are the positives. I mean, so because of all these things, definitely not only not only a sector. I mean, we should look at the entire market. The entire country is going to benefit with all these developments. So yes, I think we've taken quite a bit of time. I think it has been a very lengthy discussion about many sectors, about Colombo Stock Exchange. So if you have further questions regarding the corporate earnings or any other sectors, feel free to reach out to your investment advisors or the SoftLogic research team. We would be more than happy to answer your queries. So I think it's time for us to wind up today's proceedings now. So thank you everyone for joining in with us for today's session on corporate earnings. Hope to meet all of you soon from another session. Thank you very much and have a great day.